What's going on, everybody? It's Jeff here. Welcome back to the channel. AMC earnings reported yesterday, beating expectations, popping out of the gate, getting up to $14, only to slowly sell off and actually end the day red, down just over 5%. In this video, I want to go over a few things that happened not only today, but on that earnings call. And then I want to talk about tomorrow, as April CPI numbers are looming, what some expectations are, and where the stock market will head based on tomorrow's release. We're going to cover everything. So let's get right into it. First off, AMC, as you heard on the call yesterday, if you were on it, or as you saw just from the price action after hours and very early this morning, expectations were beat, sentiment was positive, outlook was positive. A lot of the issues they are having as a company and from a financial and management structure are being resolved, and also have plans to continue to be resolved. The outlook was good. One thing I do want to mention, this entire earnings season has been very different, especially for the last probably 8 to 10 of them, going all the way back to 2018, 2019, meaning investors need a lot, okay, right now. You've watched companies that have been absolutely destroyed. Look at Peloton, Upstart, just to name a couple that have been destroyed. Even companies that have, produced good earnings and had positive outlook going forward in the tech sector, and other blue chip companies have struggled as well. So it really goes unbeknownst to see that, yes, investors are seeing a pullback and the shorts are piling onto this position. But a couple things I do want to mention. Okay, 13F filings for the first quarter only have a couple days until that 45-day deadline is met. And as of right now, the institutional buying on AMC has slowed, as this chart clearly shows. However, the selling is still minimal. We had the quarter two of last year selling after that $72 pop, which of course is understandable. You saw institutions really pile in that $20 price range. And since then, there's been adding that has slowed a little bit. Obviously, looking at quarter four, 247 million, and clearly on quarter one, only 23 million, but the selling still isn't there. Okay, so a lot of this is being pulled down by the entire market. Some of those PE ratios that really need to come in line, with relative values, especially because interest rates and the cost to borrow money is going to be higher. All of those speculative stocks such as high growth, future revenues, all right, and even though AMC is in that meme sector category that does fall under speculation, they are the ones that are getting hit the hardest. All right, if you look at the NASDAQ 100, these are the top 100 companies in the NASDAQ indice. You can see the 20-day average, how many stocks are moving above that 20-day average, less than 7%. The 100-day average is less than 15%, and the 200-day is also less than 15%, meaning there are only a handful of stocks that are actually faring okay. Not that they are above, you have Lockheed Martin, which is, one of the, outlanders per se, but not that they're doing better for this year. They're just above that 200-day average. And obviously you clearly see, like the two I mentioned earlier, Peloton and Upstart, which are down nearly 90%, right, from their all-time high. So the entire market is getting heavily hit. And clearly it is targeted on the stock sectors that I just mentioned a moment ago. Let's talk about tomorrow. I've covered it for quite some time. I was bullish on CPI, and a part of me still is, seeing that prices have begun to stagnate. They're still high. They're going to remain elevated. All right. However, I do see inflation starting to ease a little bit. And I think other, analysts do see that as well. Okay. The number that they're going to be looking for tomorrow, which is key, is to be under the forecast and the consensus, which is under that 8.1%. Let's say UBS had that expectation of about 8%, which I was on board. They've been very accurate throughout this entire time frame. If investors see that inflation is subsiding and your core CPI, which is everything excluding food and energy, which has decreased over the last two reportings, if that sees a third reporting, that really will signal, minus anything that could, change, all right, and shock the supply chains or shock the economies, that we have hit a bit of a peak and we are starting to stabilize to potentially downtrend on that inflation. That is going to be very bullish for the stock market, especially because the 10-year treasury yield has just been absolutely spiking, and it only comes to a time where it gets overextended and it needs to pull back and breathe just a little bit. You've watched the VIX come down just a little bit. It's still sitting over that $30 range. However, for the amount that these stocks and indices have pulled back, that level is low, and you're seeing a little bit of divergence, which is a bullish sentiment. Okay. Now, lastly, about CPI, my only concern, and I've mentioned this before, is the fuel, especially the diesel. If you look at a month ago, it is up about 10%. Everything that goes in the stores gets transported by truck. And I think this is going to have a big impact, especially because the core CPI has decreased over the last two reportings. However, that's what's really dragging on inflation has been food and energy. Okay, so keep an eye on that if you do see a rebound, especially because the SPY is sitting at that $400 level. QQQ, the Nasdaq tech sector, is sitting at that $300 big psychological level of support. Look for another bounce to the upside. Okay, now I'm not saying that we're completely out of the clear. If reporting does come back, there are still clearly other issues. The Federal Reserve is in a very tight spot. And I've said this at the start of the year that no, I don't see a market crashing. I know some of your stocks have crashed, okay, or the indice is down, 20, 22%, especially the tech sector from their all-time highs, or even their year-to-dates are down very heavily amount. However, a crash is when you see those double-digit, drops in the matter of just a couple days, like we did back in March of 2020, where there is insane panic. Right now, there's a lot of fear inside the market, but that panic hasn't really stricken yet. Once we can get that panic to strike just a little bit, which is probably going to happen, you're going to see a little bit of capitulation and then a move back up to the upside. All right, you need to take a little bit further of a look out. And like I said, also, this is a great time to really look for quality stocks that are down, getting out of some of those high growth speculative stocks that really might not see those all-time highs again. Looking at Upstart that went from $40 all the way up to $400, which is now sitting below $40. Seeing Upstart get back to that $400 price point, that might be something that is very far stretched. And like I said, it was that euphoric era that we were in after all this money was pumped into the economy. Okay, and like I said, a lot of rotation out of other sectors that were getting hit, such as travel and leisure and so forth. We might not see a stock like that really get back to that all-time high, but good quality blue chip companies that are at a value, stocks that you were looking at saying, I wish I could buy this when it was $50 cheaper or 20% cheaper or whatever it was. You have that opportunity as of right now. And like I said, always make sure you dollar cost average into those positions to where you are minimizing your risk. Volatility is going to continue for the rest of the year. There are just too many things happening from a political standpoint to an economical standpoint, and also everything that's going on with the Federal Reserve as well as the labor markets. There's a lot of changes happening right now. Expect the volatility, but inevitably, just like the euphoric, eras and times end, like we were in, all right, where any single stock you could just throw some money on and it would go up 100% in a couple months. We saw that just like those eras end. Same thing, these heavily volatile times end, all right, and these panic-stricken, fear-stricken eras end as well, and the VIX will cool down. So guys, that's it for this video. I'll see you in the next one.